Okay, it is Friday, December 17th, 2010. This is Chess and Wine here doing this market wrap up video edition. Basically, the essence, and we're looking at a daily chart here, the S&P 500, the essence of the price action of this past week that just ended has been that of a quiet and a high and tight consolidation, especially after the run-up that we saw coming out of that November 4.4% correction and a little bit of basing action here. And then, obviously, as I've been discussing, this angle of ascent was very steep, and basically this week was very constructive for the bulls, not just because it was a consolidation in and of itself. It's not just what the market does, but it's how it does it. And the nature of the consolidation, the how it consolidated, was, like I said, very high, tight, orderly, and quiet. And it took up this whole past week. So all of a sudden here in the middle of December, when everyone's talking about the bullish seasonality, the market has been able to kind of work off some very overbought conditions in a very kind of benign way. We really haven't seen any heavy selling. We haven't seen a panic to get out of the market. In other words, the big buyers here, the smart money, kind of bought down here and held all the way up. There really wasn't a rush to get out of the market and aggressively take profits. We didn't see any violent shakedowns, maybe back to 1200. Instead, for the most part, those big buyers are quite content to stay in the market, and usually, again, historically, within the context of technical analysis, that usually portends higher prices here. Okay, so let's take a look at the NASDAQ composite, and I think you'll see a similar kind of situation with a high and tight consolidation that really spanned this past week that just ended. Now, today we did break out, I guess, if you want to be technical here, we did actually make a new 52-week high on the NASDAQ composite, although the nature of this candle, and this is where Japanese candlestick charting really helps, this is a doji day of indecision, essentially. You could see it really wasn't kind of big, powerful Maribozo or a big green candle here. Instead, it was just kind of just a little bit of, I guess, dribble, to borrow a word that I've been using this week, or last week, I should say, as we kind of 2 weeks ago, as we kind of dribbled higher. So I wouldn't necessarily call this a bona fide breakout today, but if anything, I think, the bottom line is that after the sharp run-up that we saw coming out of the November correction, the NASDAQ has digested its gains well, and again, looks poised for higher prices. Now, what's interesting is that the Dow Jones Transportation Average, the trannies here, they've actually been basing out for 2 full weeks here. So again, you've got these bearish guys who maybe been bearish for the past 100 or 150 points on the S&P 500, and all of a sudden, the transports, even when they get a little bit extended up here, you could see how benign that they work off that overbought condition. Again, 2 weeks flattening out here of just orderly consolidation. Perhaps it's the trannies are waiting for this 20-day moving average to rise up to price. But either way, you just can't deny how healthy it is that the trannies broke out above this key area here, and they've been able to hold it over the past 2 weeks, like I said, in a quite orderly way. Russell 2000 is going to give you the same look as the NASDAQ and the S&P. Consolidated this week and a doji today. I really want to keep an eye on the financials. Again, this kind of got this tight falling wedge pattern or bull flag, whatever you want to call it, counter to this move. And basically what you're looking for is any kind of upside breach above this upper trend line here of this rather tight falling consolidation pattern here. And you can see these dojis starting to flatten out. Now, what name probably best describes this current market after the week that we've had is Apple, really the marquee name and the marquee firm in the world right now that everyone kind of looks at. You can see the stock has essentially gone dead. Now, what's interesting is you have bulls and bears alike on either side making bold bets, saying Apple's definitely going to 400. Apple's finished and it's going to 250, and look what the price has done. Nothing. It's gone dead. So who do you side with? Well, again, the overarching uptrend, overarching trend is still up, and we've got these rising 20 and 50-day moving averages. So I think you still have to give the benefit of the doubt clearly to bulls. I think it's just pure insanity to short Apple right here. And I think whichever way Apple breaks, that's probably going to be a good tell for where we're headed the rest of the year.